Not completely true, but there is a little bit of a shift happening. And how does this impact and increase the supply? You don't have to be a wizard to know this one, but homes are generally unaffordable. You're probably not going to have quite as many new listings coming into Q4 here. In about 30 days or so, we're going to actually see the closings of these pendings. So we have less homes leaving the market. So my guess is that, this next year with some uncertainty, I don't think we're going to see crazy high increases. Again, the uncertainty in the world, I think we're going to be leveling off or decreasing a little bit more than we usually see in Q4. And that's how many homes are just sitting here in escrow, getting ready to leave the market. The longer things sit in the market, the more likely they sell for less than asking price. The Milwaukee housing market is in a huge shift, and all of the inventory is coming back on market, and it's now a buyer's market, and you can get anything you want for complete discounts. That's what a lot of the news headlines are saying right now, but that is not entirely accurate, and in this video, I'm going to tell you why. My name is Jacob Sheets, your Wisconsin real estate agent, and me and my affiliated agents cover the entire state of Wisconsin. So whenever you are ready to book a buyer or seller consultation, where you can take all the time you need to take in all this free content and enjoy the channel, and then when you are ready to make that step and actually get the ball rolling, or let's say you're maybe a year out and looking to sell, you can then book your appointment and we can start strategizing and game planning the best course of action for you. Before we get started, I do ask for 2 free things. 1, you click the subscribe button below, and 2, you ring our notification doorbell so we don't miss any of our future videos. And if you're a real estate agent watching this video and you're looking to partner with me either by working with me directly, or 2, you want to stay at where you're at, totally cool, and you're wanting to be a referral agent, just go ahead and reach out. There'll be another link below in the description and in the pinned comment. So with that, let's go ahead and dive into our October market update. So like I had mentioned earlier, a lot of the headlines going on is saying that things are going crazy, and now it is currently a buyer's market and there's so much more inventory. Not completely true, but there is a little bit of a shift happening. So we can see right here, I'll give you the big picture, and as a reminder real quick before we dive in, 2 things that matter to you, buyer and sellers, just keep it simple, right? How does it impact the supply of what's available in the market compared to last year and compared to historical trends? And how does it impact the demand? So how many people are still looking for a house? How long are things sitting? And how hungry are people to get into a house right now? We'll take a quick look on this graph from a big picture and also kind of break it down step by step. We can see that they're going about the same speed. You can see they're going a little bit quicker, but I mean, it's pretty negligible when you get a couple days on market difference. Month of supply, and I'm going backwards today for all you who normally watch the videos, keeping you on your toes. The months of supply, we're going up a little bit. So what that means is that there's a little bit more available on the market at the end of this month. Here are the September statistics of going into the Q4 that we have of 2023. There's a little bit more on market, and why is that? Is because we went down in active listings, down 2.5%, but we were down about 100-ish listings. So that means that from last year, there was just a tiny decrease of new listings that came on the market. So supply lever, down a tiny bit, not a lot, but a tiny bit. Now sold listings, we were down 300, so down 21.6%. And how does this impact and increase the supply, right? So if there's, it can be kind of confusing, right? But this is kind of like a plus sign, and this is kind of like a minus sign for supply, right? So when new listings go down a little bit, we go ahead and say, okay, that our supply lever is going down a little. And then when we go over to the sold listings, that's how many houses are leaving the market. So when there's 300 less leaving the market, that means that there's more left over at the end of this month. Hopefully it's a nice easy way to break it down for you. As a reminder, when we wrap that all up, the 2.2 months, does that mean it's a change in the market? Not exactly, because historically on average it's about 6 months is a balanced market where no advantage to buyers or sellers. Now it's kind of saying 4 to 6 months is no advantage to buyers or sellers. So 2.2 in general, yes, we are kind of still in a nice seller's market for those that are looking to list their homes, but you'll see kind of broken down by price point later on in the video, which markets have more supply sitting around than the others. And if you were watching our prior videos as well, you would have known that the median price per square foot has been consistently going up, and here's a pretty big jump from $179 to $194 dollars per square foot, and also the actual average sale price for the area is currently at $385,000, and now that again is averaged together with single family condos, all that good stuff. And earlier in one of our other videos, we were actually at $400,000, so it's down a little bit, but It's pretty normal to the seasonal trends, which you'll see in the graphs again here in just a little bit. So let's dive into the metrics where we can see it month by month, but also going back all the way about like 10 years or so from a visual standpoint as well. So you can really see the trends and if there's something that's unusual or different, and dive in from there. So the first thing we can scroll down to, we see the general market overview. You can pause the screen now and take a look at this if you would like. However, I'm going to jump into each one in a little bit more detail one at a time. So here are the new listings, or if we kind of look at from that graph in the visual in the first one, it was that first column all the way to the left, and it's the one that's positive plus new listings coming to the market, new inventory and new supply that's impacting our supply lever. So right here we have over here, this is where we are currently at. You can see the 1,759 new listings in September, and in here year to date. Now, if we go over here, we can see year to date, obviously we're crazy low. It's just been constantly getting low, low, low. So yes, overall, very low inventory of where we're at, but also going over from year to year, not much of a change. And we can kind of see here, here is where we're at. September statistics up here, September, I believe over here, September, we kind of always see a drop. We always see a drop. So there's not going to be quite as many new listings coming in, most likely in the winter into Q4 per usual. Just be prepared. There's probably not going to have quite as many new listings coming into Q4 here. And the only abnormality that I see here is that we're missing a peak. We're missing all these other years have had peaks and following the same exact trends, but we kind of have a lot higher peaks in the springtime. So this is just saying that we're still very compressed and we haven't had any relief. And there's most likely, unless this goes completely flat and straight, we won't see a bunch of relief coming back into the market enough to keep up with the very high demand that we have been seeing for the past handful of years. So if it does stay flat and there's a bunch of new listings coming into the winter, we might see some relief in the spring. However, my estimation and my guess going forward is that it's probably going to continue to drop down per usual and then come back up in the spring. If we come up and have a higher peak than these other years, then great. That'll probably relieve some of the pressure we've been seeing and feeling as buyers and balance things out a little bit. Where also the only other thing is if it stays normal, we don't see these high of peaks here in these prior years. If the demand goes down where people get knocked out of the market, we still have high interest rates or whatever happens, things with the wars going on in the world, if that really shakes things up and demand goes down as well, then we might be able to see a little bit more of a balanced market, which is the first time in years that might happen. So it's definitely possible. Now, pending sales, I'm not going to spend a lot of time on this one. This is, kind of have lag indicators of sold stats of what happened, and then like lead indicators, what's actually coming up, what's coming soon, right? So this is the September pending sales. In about 30 days or so, we're going to actually see the closings of these pendings. Other than that, the last trends here for these last 3 years is pretty spot on. The general trends are the same for almost all these other years, except for right during the beginning of pandemic time here. Now, our closed sales is a very interesting stat because we see it is down significantly from all these other peaks. Even these years in the pandemic time, we've still had a pretty good amount of closings in the spring and summer comparative to our other years, right? So now we have a compression. And what does closed sales mean, right? That's closed, so they're leaving the market. So we have less homes leaving the market. That means ideally our supply should be going up, right? But the amount of things that have left aren't outpacing the things that are coming new to the market, if that makes any sense. So in my opinion, right, I think this is saying that we're kind of scraping the bottom barrel of what's even left and available to get to the closing table in the first place, rather than like, ooh, things are totally going to shift. Someone could disagree with me. If you disagree, just let me know. Pop down in the comments. But I think this is saying we're scraping the bottom of the barrel, whatever's left for inventory, and we need some more houses to come in order to get our, averages back up here from, prior years being at, more normal higher peaks. And again, if this does get impacted by things like the wars that are happening and things going on, and we get a springtime that doesn't have a peak up here and it stays flat here, we'll probably get a lot more inventory coming up and we'll probably have a lot more balance, which is very likely impossible. So that could be keeping in mind both for buyers and also for price points. And my guess is that, this next year with some uncertainty, this new spring market, I don't think we're going to see crazy high increases. We could see some decreased prices if our demand going into this year, because of all the craziness in the world right now and the high interest rates, if that's not, super strong at the beginning of spring, we might see some decrease in prices. I don't think it's going to be to the level of a crash, but I do potentially think that we'll see a little bit more leveling compared to a crazy appreciation or inflation. You can let me know what you think of that also in the comments below, but I'm kind of anticipating it to be a lot more stagnant than what we're used to in the past few years. Days on market, won't waste your time. It's low. Things still go generally fast when they're priced right and in good condition. Now this is different at different price points, which we'll wait for later on in the video. Median sales price. You don't have to be a wizard to know this one, but homes are generally unaffordable. We're much higher than we've ever been, and right now we're kind of dipping down. And this dip that we kind of have in the same timeline is decently similarly sloped, so but of course still an increase from last year as far as home values go. You can take your pick. Want to look at median sale price or average sales price? We won't dive into the deep details right in this video of why you should look at one or the other and how they're different, but we're just going to say, yes, these trends are relatively normal from prior years. We were really leveling off a little bit more, but we have record high prices, which makes me to lead to believe with the uncertainty in the world, I think we're going to be leveling off or decreasing a little bit more than we usually see in Q4 and Q1 year over year. So how are houses selling compared to what they're currently listed for in the market? Higher or lower than what they are listed for? On average, we are the 101% of the value. So if you had a house listed for $100,000, the average is selling at 101, meaning that on average, they're usually selling above their asking price still. Again, going into this month here in October, we're going to see a decrease per usual, but the question is going to be how much of a decrease. We're a little bit higher than usual, so we'll see what actually levels out. My forecast and my prediction is that, again, a pretty slow winter time. So what does this mean for you buyers and sellers? That if you're planning on listing, and it doesn't make a difference for you on time constraints of listing now into Q4 or getting into kind of Q1 of next year, probably wait because you're going to most likely have less, people going to overbid on your property like you do at the beginning of the year. And for buyers, it means that you might have a little bit of negotiation power, depending on a case-by-case basis, of course. Trust your buyer's agent when they're negotiating for you and they're talking to the listing agents about what is going on with that specific listing. Just because a stat says one thing, it could be a very hot property. So make sure to trust the agent that you are choosing to work with for the good advice. Inventory of homes. There's not a lot of homes for sale. So we look at this here, slow climb, and what I'm guessing in the Q4, it's going to decrease here again. But if we have a still consistent climb or a flat line coming into Q4, that means that we'll be pretty well charged into this spring season. So if you ever thought in the past 3 years we're ready for some sort of shift at all, my chips would actually be for a little bit of a shift into this year compared to the last 3 years, which has just been crazy low inventory, still very high demand. We still have high demand in our market. We just do. But if the inventory does stay where it's at, or does, that lever increase a little bit more, we get a few more listings, I do anticipate that demand to be lower in Q1 and 2 from these other 2 or 3 years. So hopefully we see less homes leaving the market to get to a little bit more of a balanced market. Months of supply, already talked about this, but with 2.2 months of supply, that's far below our 4 to 6 month range of a balanced market, meaning that statistically we are in a seller's market. Okay, now let's take a look at price point. So everything from $100,000 homes to $3 million homes and everything in between, what is the actual statistics broken down by price point? Take your pick here. If you want to look at average or median sale price, we're going to look at average for this moment. All properties averaged together were up from $376 to $385, and single family homes were up from $389 all the way to over $400,000, which for buyers in a high interest rate environment, especially first time buyers, they're feeling this squeeze. I can tell you firsthand from a lot of the buyers that I'm working with, they're just feeling constricted. Obviously what's bringing it down here is the townhouses or condos that are being sold pretty much on par as far as not too big of a change in the average and also in the median sale price. Okay, we're at closed sales by price point. How many homes again are leaving the market this month? They've gone, they've left, goodbye. So decently similar in the lowest price point up to 100,000, 100 to 200,000. There's significantly left that have left the market, significantly. 2 to 300,000, significantly less that have left the market, less that have left the market, and 300 to 500. We're getting a little more stable in the 5 to 700,000s, and the 700 to 1 million price range, we're actually down 2 properties. So basically this negligible, about the same amount of properties that have left the market as far as supply. So the pending sales, how many homes are just sitting here in escrow getting ready to leave the market? So next month's stats, for our next month market update, how many of those are going to be leaving or closing next month? We see a large increase in the 0 to 100,000. We see about the same for 1 to 2, about the same for 2 to 3, and compared to last year, a lot more are under contract right now and getting ready to close for the $300,000 to $500,000 range, and the 5 to 7. There's a lot more that are under contract getting ready to close, which is pretty fascinating to me, especially considering that, on average where we're at right now, we're seeing a little bit more inventory in this price range of 500 plus. The 700,000 to 1 million, we're also seeing a little bit more. So in comparison to last year, if people are saying homes aren't selling, well, show them this stat. I mean, the pending sales is higher than last year, getting ready for the October stats coming soon. How long are properties staying on the market by price point? We see a significant increase from last year for 0 to 100. We see a decrease. So I can break it down for you, right? This means that homes in this price range are lasting longer on the market before they sell. In the 100 to 2, 3, 5, homes are going faster than they were. Here it's pretty negligible, but here it's a decent enough jump to say that they are going quicker. And then at the higher price ranges, it's down a little, pretty negligible. It's up a little bit, 700 to 1 million. See, this is why I thought it was interesting for the last slide about all those pendings, is that these homes are tending to sit a little bit longer on market, and we can feel it, especially in where I live in Ozaukee County as well, again servicing all over the state, but where I live in Ozaukee County, we can see things sitting a lot longer in the 700 plus range into the 1.5 2 million. And of course, like I always mention, this you can take not a ton of stock in this average for the 3 million plus, because there's so few properties in the Milwaukee metro surrounding area that is the 3 plus that it's hard to really dack down and just make your decisions based on averages. So you really got to go a case by case basis and talk to your agent about if you're in this 3 million plus luxury range. You really got to go for a lot deeper of a dive into each individual property and what are the comparables directly around it, specifically, like especially around lakefront properties. When we see something at this high of a price range, you got to dive deep in getting that background information before you make a decision, and don't just back it up by just these general statistics. You're really going to enjoy this slide because it's going to show you, when you put your house on the market, on average, can you anticipate to get more than what you're asking or less? In this lower price range, significantly less than asking price. Here is right around at asking price to 1 to 2. 2 to 3, we're looking at the highest amount, 102% plus of the asking price. So right here is the crazy hot place of where people are paying more than the asking price and still fighting to get a home, right? That tells me that the high demand in this area, high demand, still decently high demand, and lower demand here, right, in that 1 to 3 million. So that's what's kind of flagging me and telling me here. But we're at 101 and 100%. So you can kind of see it's not crazy high in this category, but we are getting it right around 100% for all of these categories here, with the hottest market being the $200,000 to $300,000 price range. I can attest to that personally, where I've still had buyers going into this market. They're starting to actually, it's cooled down a little bit so they don't have to compete against everyone, but let me tell you, the competition, it is still out here. Now at the higher price ranges, we're at about 100%. Pretty great for the 700 to 1 million. Now, if we see the trends continue to go up for average days on market in the 700 to 1 million and a little bit over that plus, like we saw in the last slide, I can anticipate this to be less, because the longer things sit on the market, the more likely they sell for less than asking price. Just how it is. 1 to 3 million, pretty similar from last year. 3 million plus, we're up to 111, but again, do a little bit more deeper dive than general statistics in that price range. Inventory of homes. So this is just straight up supply. How many properties are available for sale right now? Pretty even from last year, a big decrease. So there's a lot less in the $300,000 to $500,000 price range that actually is available to look at and go inside of. I can feel more people starting to list their homes at this price range and in this price range, and the days on market is starting to lag and go a little bit longer, and a little more people are trying to sell. Why? Because a lot of people are trying to get out when they can, when they see, wow, homes are at the highest price they've ever been at, and they're at this bigger price range. Let me cash out now. I can rent, or I can buy and downsize something. And we can kind of see the only difficult thing for those people that want and they're going up and selling more here is that the things that most of these people in the 700 to 1 million price range, they want to get into something 300 to 500 when they're downsizing, right? And there's a lot less to choose from. So that's one of the frustrations that some of these people are having of like, well, I want to get out of my big house, I want to cash out on it, and I want to simplify my life now too, but there's less to pick from. So you got to be patient. If you're in this market, anticipate longer waits until you sell, and also a little bit of frustration when you might have to wait longer to find the right thing for yourself as well. So needless to say, you just got to be patient if you're looking to downsize because you have a little more competition and a lot less to pick from. So do you agree with me in thinking that this next year, in 2024, we're going to see some leveling off in pricing and maybe a small amount of decrease in pricing on average? Please do let me know in the comments below. Agree, disagree. If there's anything in here that you really liked or that stuck out to you. I know for me and for a lot of my clients, being able to have this data in the background just constantly flowing so I know everything that's going on in the market, it's really helpful because sometimes we need to make really fast decisions when a home that's perfect for us comes on the market, whether we're downsizing, there's more competition against us, or we just are waiting for the perfect home or for prices to kind of level off or flatten out or whatever. Hopefully this video in particular and all my other market updates could be of value to you. Now, if it was valuable and you do want to work with myself or any of my affiliated agents in the entire state of Wisconsin, a reminder, that link is below so that it's in the pinned comment and in the description. You can book an appointment directly into our calendars for a buyer or seller consultation and get going right away. Or if you are an agent that wants to partner with me, either by joining our brokerage here and working side by side with me, or you just want to be a referral partner and build a relationship with myself, you do have that link that's below that you can get on my calendar and talk to me directly. Thank you guys so much for watching. I look forward to talking to you again soon. Check out one of these videos here, which is a prior market update videos, or a little bit something new for you to take a look at. I would love for you to enjoy those other videos I've been working so hard on. And with that, I'll see you in the next one.